Well, hello, everybody. My name is William Reilly. Work with Chainlink Labs as head of Web3 sales and strategy. And I'm very excited to be discussing BTC-Fi on Solana with a star-studded cast today. With that, we'll just go down the line with intros. Thomas?
Yeah, hi, I'm Thomas, co-founder of Kamino, lending market on Solana, about $3.5 billion or so there.
Hey everyone, my name is Jacob Phillips, one of the co-founders of Lombard. Lombard is the leading Bitcoin LST, and you can think of us more fundamentally as a Bitcoin bridge that bridges Bitcoin into new ecosystems. So, Ethereum, Sui, soon to be Solana. Lombard has about just shy of $2 billion in TVL and is integrated within most of the major DeFi protocols you can think of in Ethereum, Aave, EtherFi, Fluid, stuff like that.
Hello everyone, this is Ryan Chow. I'm the founder of Solv Protocol, and we have been dedicated on Solv for over 4.5 years. So it's been a very long journey. In terms of Solv Protocol, we build an institutional infrastructure for Bitcoin finance. In terms of like yield generating, lending, and some other stuff, but related to financial service on Bitcoin.
Fantastic. Thanks for being here, guys. Just to kind of set some perspective on what is BitcoinFi or BTC-Fi. Ultimately, Bitcoin is the behemoth of the crypto world in terms of liquidity and value that is stored within it. All of that to say is Bitcoin, the vast majority of it actually does not get put into play or into use in what we know as DeFi. So this is a tremendous amount of liquidity and value that sits idly by and sidelined. So with that, enter BitcoinFi, where it actually obtains utility by going to various blockchains, Solana in specific, and is used for a number of things. And that's what these fine folks are working on here today. Now, guys, panel, let's open this up. What is BitcoinFi to you, and ultimately, why is it gaining momentum? Thomas?
Yeah, sure. Well, I think Bitcoin is undoubtedly the king and one of the best financial innovations ever created. And I think any way to unlock more of its capacity to be used in these different economic environments is something which makes sense, and we should definitely strive to do it. Kamino as a credit marketplace basically also taps into one of the most fundamental parts of economics as well, which is credit. And having Bitcoin be further enabled within the world of credit with more interesting use cases that are powered by this different technology that these guys are building, I think makes it very interesting. And yeah, basically the more Bitcoin, the better, I think.
Awesome.
William, the way you framed it as BitcoinFi, I think, is kind of interesting. Out of habit, I almost exclusively refer to it as Bitcoin DeFi. But more fundamentally, if we walk back, like what Bitcoin finance has been since the dawn of time, Bitcoin finance traditionally was centralized exchanges. This is where you traded, you used stuff like BlockFi and Celsius to lend and borrow Bitcoin. So, BitcoinFi only existed on centralized rails, and only as of recently, coming up in the past, maybe 18 months, did we really see significant traction in on-chain Bitcoin finance, which is where Lombard and Solv spend most of our time. And the whole idea of like BitcoinFi, I think, is a little bit of a nuanced term in itself, because what it really is just DeFi with another asset. And one of the things that we've been sort of preaching since the inception of Lombard was that you don't need to rebuild an entire new financial ecosystem just for Bitcoin. We've already built all of these primitives in the ETH and Solana ecosystem. We can just plug in, a new asset as an ERC20 or an SPL. So we can reuse all the existing infrastructure that we have on and off chain for this new asset. It's just more of a matter of giving it the sort of the praise and the attention that Bitcoin should have had as the core collateral within DeFi the whole time.
Yeah, I agree with it. So I think like previously, most of the people would deem Bitcoin as a like passive store of value, but now more and more people will try to make it as a like programmable, compliant, and globally accessible kind of financial assets. I mean, for the Bitcoin. So I mean, like currently Bitcoin finance, from my perspective, there are two things. One is the TradFi Bitcoin finance. So a lot of like Bitcoin ETF. They try to wrap Bitcoin into a Bitcoin ETF. Actually, that's a Bitcoin finance, because after doing that, they can like bring BTC ETF to bank for lending, for a lot of stuff. So that's a kind of like financial service on Bitcoin. And then the second thing is DeFi. Like it's all about composability, like just like Jacob mentioned about, and also like Kamino and Lombard. So also for Solv, we try to like integrate with all those of lending, all those of DEX, and try to make Bitcoin as a very kind of programmable assets. It's all about composability. So yeah, I think this is something that really we can see two power that really drive like the growth of the Bitcoin finance. One is the TradFi, the other one is DeFi.
Excellent. You know, BTC-Fi, BitcoinFi, it seems to be quite prevalent, or I guess matured in the EVM ecosystem. However, let's zone in and focus on Solana. We do have Kamino, the largest lending and borrowing market on Solana, with us here today, Thomas. With that in mind, Jacob, I would like to get your opinion on what does BTC-Fi look like as an opportunity within Solana?
Yeah, I think it goes back to the core of what the chain is optimized for. So my assumption is that we will see Bitcoin evolve into like slightly different ecosystems for ETH and Solana. ETH might be more BTC as collateral, as where Solana might be more on-chain trading, payments, faster stuff. Things that are optimized for a very fast chain. In this case, like through LSTs and other forms of Bitcoin tokens that have gotten a lot of adoption within the ecosystem, we've seen the use case of Bitcoin as collateral, used for borrow lend, used as collateral for trading options or perps. What we haven't seen pick up is like on-chain BTC spot volume, or it's a little bit there, but certainly not at the scale we would expect it to be. The most significant use case for Bitcoin anywhere in finance, traditional or DeFi, is trading. I mean, this is what all centralized exchanges are built upon: Bitcoin, BTC trading pairs, BTC perps, and yet almost none of this has come on chain. And it seems like such an obvious opportunity that somebody's going to crack eventually. And frankly, I think most of the ultimate borrow demand for Bitcoin and all of the yield in the ecosystem sort of comes back to this fundamental truth that there's like really deep on-chain liquidity. Solana, I think, is going to be the first to crack that.
Amazing. Yeah, very, very unique ecosystem and built for different things. Has different edges over in Solana. With that in mind, Thomas and Kamino, you've really developed Kamino to become the home of deep and long-term liquidity on Solana. So how are you positioning Kamino to be the foundational layer with Bitcoin Fi capital entering into your space?
Yeah, I think for the last 2 or so years, we've been building and operating Kamino. A lot of it has revolved around the economic activity that sort of has pre-existed on Solana for a long time, around the LSTs in Solana. And a lot of these, vanilla assets have been the where a lot of the limit has been until now. I think we have V2 launching next week or up soon, and that will enable us to scale in a number of different ways and look at a whole bunch of different novel assets that come on-chain that go beyond just what you see in normal spot markets. So the tokenization of everything, including yield strategies and Bitcoin yield, to be used as collateral to power different kind of trading strategies and just more advanced collateral management, I think is going to be really interesting. And I think Solana can operate in every way that any other network could, as a base for sustainable, reliable collateral, but also as a way to scale and empower a whole bunch of other financial use cases which you just can't do on a chain that doesn't scale. And so I think with Kamino being well positioned to facilitate all of this economic activity, and with the help of people like Chainlink as well to power a lot of this infrastructure, I think we're in a good position to see Solana take off and be the home for a lot of these novel assets.
Yeah, fantastic. With that in mind, and looking at Solana giving this unique edge, Ryan, over at Solv, I'd like to understand, you're bringing structured yield products to the BitcoinFi landscape. How are you designing these products for this new class of on-chain capital? And also, how does Solana's infrastructure enable this in ways that other chains aren't today?
Yes, I think as like Jacob said, like Solana has a very thriving kind of ecosystem that has a lot of users, a lot of traders in the ecosystem, and very high TPS kind of infrastructure. So that's something make like Jupiter and like Kamino a lot of very good kind of projects just happen or just like grow up on the like in the like Solana ecosystem. So that's why when we see like the Solana ecosystem, we will try to find out or originate a high quality yield bearing kind of Bitcoin products in Solana ecosystem, and then we find out like why not to build a like delta neutral strategy on Jupiter, and that products we got over 1,000 Bitcoin stake into it. That it seems they can because of like the very I mean like very thriving kind of ecosystem for like Jupiter as well, then it could really generate a sustainable and very juicy yield from this ecosystem. And then that's something make us realize that DeFi is more for Bitcoin finance is more like a use case and more like a yield source. And TradFi is more like a capital supply end that more and more institutions they try to participate into like Bitcoin finance. They will deploy their money capital into Bitcoin and try to like find out some use case on their Bitcoin. And then DeFi, especially Solana ecosystem, would be the very good kind of targets or kind of choice for them. So that's how we like build like institutional infrastructure between DeFi and CeFi, but both are for like Bitcoin finance. So yeah, that's it.
Phenomenal use case, seriously, and very unique to Solana as well. Jacob, over at Lombard, you guys are unlocking, the dormant amounts of Bitcoin and bringing it into the DeFi ecosystem. What's driving Bitcoin holders to do this, and where is that capital going to flow to?
Yeah, so maybe I can start with what's driving it right now and what I think will drive it in the future. What's driving it right now is that there was this massive catalyst, this sort of exogenous incentive in the form of Bitcoin staking that caused a lot of Bitcoin to, for the first time, consider getting off ground zero, in this case, sitting in cold storage. So because there is now this like self-custodial, very risk-minimized way to put your Bitcoin to work and earn a decent yield, a lot of people were interested in Bitcoin staking, then realizing they didn't want to deal with a lockup, discovered liquid staking, which of course was popularized by Lido, and then had this great opportunity to put all this Bitcoin to work. So staking was sort of the gateway for us to onboard a couple $1 billion into DeFi in existing ecosystems. And we've seen Bitcoin DeFi tried before. I mean, 2020 cycle there was like a big Bitcoin DeFi movement with BadgerDAO, and WBTC gained popularity, but it never really gained enough attention. We never got to critical mass. There were never DeFi protocols, like existing big DeFi protocols, that excited about Bitcoin finance. Look at what happened this cycle. Thanks to Lombard and Solv and a couple other LSTs, you had Pendle shifting all of their focus to Bitcoin DeFi, EtherFi doing a big Bitcoin DeFi push, Morpho going big into Bitcoin DeFi. It was like all the top DeFi protocols, some of the biggest names in the space, were realizing that there was this huge opportunity and use this first opportunity to start onboarding this collateral. However, I think a lot of this is changing because now that the opportunity has been proven out and it is sort of beyond a reasonable doubt in everyone's mind that Bitcoin DeFi is happening, for sure. Now we can start to focus on the real use cases, payments, trading, using Bitcoin as Bitcoin, not just as a collateral asset that has some sort of, interesting risk return built on top, but now we can just use Bitcoin in DeFi as Bitcoin.
Phenomenal. Giving that extra utility to Bitcoin, I think is very important. Now, I'd like to open this one up to everybody. Do you guys expect to see institutions get involved in BitcoinFi, and if so, like, what are they doing it today, or what is really going to be necessary to be put into place for them to be active participants?
Maybe start from me. So very interestingly, like just yesterday we just announced that our solbtc.core is one of the yield bearing products just got like Sharia compliance certificate in Middle East. So the reason why we do it is we realize that if we want to like tap into all those of the sovereign wealth funds that they are over like $5 trillion kind of funds in UAE that we think probably they will deploy their money into Bitcoins in the future. And then if we want to like really tap into them, like compliance is something that non-negotiable. So that's why we make that progress. And this is I think just like I mentioned, like the TradFi is more like a capital supply end to put their money into crypto, especially stuff from Bitcoin first, and then just like Jacob said, that's all about utility on their Bitcoin. And then the next step, they will find out like there are still a lot of utilities. And also, I mean, on the other hand, like utility would be another kind of drive. It will be a potential kind of demands to drive them to put their money or accelerate the whole the whole process as well.
Makes sense.
Yeah, I think you'll see a lot of institutions get more and more comfortable with using Bitcoin DeFi as time goes on. I think a lot of the blockers for many of these institutions is around robust risk management and compliance. And I think as you see these things start to get fleshed out and well organized, it'll unlock a ton of institutional capital to flow into the space in general. And the vast majority of Bitcoin is held by institutions, or at least at institutional grade level. And then the vast amount of institutions hold Bitcoin as their major asset when dealing with crypto. So there's a ton, obviously a huge market naturally there to approach. And I think, yeah, now the environment, this sort of next stage of the cycle, I guess that we're in, I think you'll see a good unlock of this kind of stuff coming on chain and figuring out more interesting ways to use Bitcoin than just sitting on it.
Makes sense.
Yeah, maybe I can chime in with one last thing.
Please.
I think if you're an institution right now looking at crypto, looking to get involved, you're looking at stable coins and Bitcoin and almost nothing else, right? Platforms for using those two. You need, I think, it was pointed out here that you need certain infrastructure that I think hasn't always been there. A lot of the Bitcoin primitives that are widely distributed within the ecosystem are either still relatively new in the grand scheme of things or not fully using the requirements. So, at Lombard, we initially built this sort of trust minimized solution and are now realizing to serve the types of customers we want to, we're going to need to integrate qualified custodians to be able to work with ETFs and big instos just to serve their regulatory requirements. And then, the institutions are all excited about doing this. They have a ton of I think every one of their clients is asking them about this. They're just trying to find the right ways to put it to work. Taking on DeFi risk is sometimes not something they're familiar with or not familiar with educating their customers on. So I think we kind of have to meet institutions where they're at. And this really means launching things that look a little bit more like a C DeFi product, or finding out what they're interested in, serving them some tokenized version of that off-chain yield, and then over time convincing them that there's much more exciting things to do on chain.
Yeah, very good points. And I would actually want to dive into infrastructure and security briefly. As BTC-Fi, BitcoinFi scales, what roles does interoperability play and real-time data play? And specifically, what choices have you guys made on these two sectors to, increase your security in your product offerings?
Yes, I think for us, it's critical that all of this infrastructure and risk management rails work as flawlessly as possible at all times. And so robustness and resilience around risk management allows for scale to happen. To scale without that kind of robustness and resilience is reckless in many ways. And so I think that it's incredibly important that a lot of focus is put on this, and that's all we think about at Kamino for the most part is risk management and how do we keep things safe. And data providers, infrastructure providers like Chainlink, add that additional layer of expertise and resilience that's critical to scaling this, particularly as we get into novel assets. You're not just pricing, just vanilla Bitcoin, but you're looking at its various derivatives and any other kind of derivative asset. I think it's going to be very important to have as clear a picture on that kind of data as you can get before you start to do any scaling. And that's really what we're heavily focused on, is trying to make everything as safe and robust as possible.
Makes a lot of sense. Jacob?
Yeah, so obviously the three of us on stage have something in common, and that's that we work with Chainlink. And I was just talking about how all of us on stage are sort of thinking about how can we meet institutions where they're at. I think Chainlink kind of did this with DeFi. I think back to last cycle when I was an investor, when I was first getting into the space looking at DeFi, and everybody was obsessed with the idea of doing maximally decentralized mechanisms, when really what we needed was someone to step in with highly efficient, robust infrastructure, something that just works right now. And that's kind of been the MO for Chainlink, I think. We are building this whole DeFi ecosystem for Lombard. Every collateral use case, well, almost every collateral use cases requires some sort of oracle to underpin this, and if not, also a proof of reserves or oracle. If this messes up, the DeFi ecosystem that we've built up upon, not just for Lombard, but I guess for Bitcoin DeFi in general, sort of crumbles. So this is of utmost importance. I mean, in a lot of ways, we think about the infrastructure decisions we make with external providers that are fundamental to the core protocol, almost as if we're making a security decision, ourselves. So yeah, I think Chainlink and many others that we've had the pleasure of working with have been core to everything we've done on the security side to make sure that we build up Bitcoin DeFi the right way.
Fantastic.
Yeah, I think like fragmentation is a very big issue for Bitcoin finance. So interoperability and also real-time data is something that pretty kind of important to solve this challenge. And that's what like Chainlink is like trying to help us to solve. I mean, like for us, like as LST projects. And then like I realized that especially when we want to try to build some yield-bearing products, firstly we need to raise money, and we want to raise Bitcoin, but Bitcoin is everywhere. It's on the mainnet, also on like Ethereum, Solana, BNB, a lot of ecosystem. So the first thing is try to like deploy different kind of the gateway. I mean, like for the products to raise all those of the Bitcoin, allow users to stake their Bitcoin in just like one click. And then second thing is that how to help them to like really bridge their Bitcoin to like Solana ecosystem for composability, right? So this is the second step. And the third thing is that once you like really bridge it, the LST, then how to really get the real-time data to show the right NAV of your LST. That's something also very important. So yeah, of course, that's obvious, right?
Well, fantastic. And I do want to thank you guys. We love working with all three of you at Chainlink, and providing highly secure and reliable infrastructure is something we take great pride in, and securing the vast majority of DeFi value in the market today is something that we take very, very seriously. And bringing that institutional adoption, quote unquote, bridging TradFi to DeFi is something that I think we're all mutually aligned on achieving together. So I'm really excited about bringing that forward in the future. Speaking about the future, let's fast forward 6 months, 12 months. What does BitcoinFi look like in the Solana ecosystem, and what key unlocks do you expect to happen to really drive growth? And again, we'll just open it up. Whoever wants to start.
Oh yeah, maybe start from me.
Sure.
I think like as I know, like Solana has its own objective, which is like 100,000 Bitcoin, gonna like being like bridged to Solana ecosystem in the following maybe half year or maybe 1 year. So yeah, from my perspective, I think that's possible, but it all depends on the use cases and the utility in like Solana ecosystem for Bitcoin holders. So I think like firstly, yield generating vehicles is something that I can think about. I can figure out that could be a very good strategy. So I mean, for the following 6 to 12 months, there should be varieties of Bitcoin yield bearing products come out in the short term or midterm perspective. The second thing is that lending. I still believe like lending service is I think lending business is the largest Bitcoin finance use case. So most of the Bitcoin holders, the largest demand is all about lending, just like what Kamino can provide for the users. I mean, the value proposition side is pretty obvious, right? So this is the second thing. And the third thing is all those of some very but I think we will see like what's the if there are a lot of very interesting kind of place between Solana token and Bitcoins. Is there any like structured products could be originate or could be designed for these two tokens? that's something would be interesting as well.
Awesome. That was a great breakdown. Hard to follow that, but one place I might just expand on a little bit is to go back to this idea of Solana as the home for trading, has the most retail activity, has the most sort of on-chain trading activity. Bring Bitcoin into this, and now you have incredibly deep liquidity because it's retail traders drive trading volume on chain creates really deep liquidity. Now Solana becomes the deepest liquidity source for Bitcoin. What does this enable? If we break down the sort of stages that Bitcoin DeFi has gone from, stage one was activation. This is just getting Bitcoin into DeFi, starting to spin around, try some stuff out. We've already done this in EVM ecosystems and stuff. Utilization is what I was just saying. We're on the verge of. This is now all of a sudden people are using Bitcoin as Bitcoin. They're using it like they would on a centralized exchange or within CeFi. And I think once you have utilization, which drives deep liquidity, then you end up at this third stage that can only happen had you done these first two, which is innovation. Now, for the first time ever, people can permissionlessly build Bitcoin applications, whatever that may be. Right now, if you want to build a Bitcoin business, you basically have to build a centralized exchange or a custodian. You have to get licenses. You run a really risky business, right? Imagine if you could do all of that with non-custodial tech. You really can't at scale right now, or if you're an existing business or looking to operate at any large amount of activity, even really having the choice to use on-chain finance or smart contracts, very soon, I think that becomes a possibility.
Yeah, I think echoing everything that was said there, I think beyond just sort of lending, actually being able to collateralize with these different Bitcoin derivatives unlocks a whole bunch of other strategies and different economic activities that can take place. And with V2 on the horizon for Kamino, this massively broadens the permutations of credit that we're able to offer. So all different varieties of term and conditions can be included in this, such that a lot of these institutions who are looking for more complex ways to actually get involved rather than just vanilla trading or lending will be able to do so at scale with the right permutations and conditions that they need. So I think as we build this sort of infrastructure for lending and these guys build, bringing that kind of the usage of it in general on chain, I think the combination of the two will unlock a lot of potential in DeFi. And I think we all here believe that DeFi is ultimately where the future of this space will be housed in many ways. And I think this is a great example of pushing that forward now, and then sewn up with everything that's done with you guys on the on Chainlink side with reliability and the data infrastructure. I think it's just going to make it all the more viable as a product in general.
Awesome. Yeah, we just want to keep it ticking. With that in mind, final question, guys. How confident are you that BitcoinFi will be successful or might even be the most dominant aspect of on-chain finance? Jacob?
That's probably this stuff.
I mean, I suppose I wouldn't be building Lombard if I wasn't 100% sure that this is going to happen. But again, to go back to it, I feel like we're already past the point of no return. Ryan and I have gone back and forth a number of times kind of saying the same thing, that BitcoinFi is already happening. It's happening on centralized rails. The only question here is how much of it can we bring on chain, or rather, how fast can we bring it on chain? If you believe fundamentally that every asset is going to come on chain in some form, it might take 10 years for us to build really robust primitives that people can use. But if you take that as your prior, why would Bitcoin, the largest asset, the most institutionally adopted asset, the only one getting a stamp of approval from the biggest governments in the world right now, not make its way into on-chain finance? In fact, it would be it would be very weird if Bitcoin was the only digital gold, but then ETH or Solana or some other native token became like the core collateral that underpins all of DeFi. So my assumption is that it would be silly if everything that sort of has evolved in CeFi for crypto doesn't make its way on chain in due time. So I think all the folks here on stage are helping to speed that up, and I can only hope that it's sooner rather than later.
Phenomenal. Love the passion, Jacob. Ryan, I assume you share?
Yeah, sure. I can't agree more for sure. And I think I will share a very interesting kind of opinion on this part, which is I really believe like Bitcoin finance is the key drive for bull markets, even for this cycle or for the last cycle. Because if we take a look at last cycle, at that time, like Grayscale, they issue like GBDC. I still deem this as a Bitcoin finance because a lot of people try to do arbitrage between GBDC and BTC. That really drive a huge demand on purchasing Bitcoin at that time and really make that bull market happen. And for this cycle, what happened? MicroStrategy. That's something similar, right? So this is Bitcoin finance actually, because why people buy MSTR? Because this is a derivatives based on Bitcoin, right? And people buy these derivatives. This is Bitcoin finance as well. And as we know, like Lombard, they locked 20,000 Bitcoin. We locked 25,000 Bitcoin. Babylon locked 50,000 Bitcoin. And we started to lock users Bitcoin from at the time when the Bitcoin price was at like 50,000. Now it's 100,000 around. So we lock a lot of Bitcoin and people don't want to sell it. That's all about utility on the Bitcoin, right? So this is the first angle that I try to explain. Bitcoin finance is so important for this whole crypto space. This is the first thing. And the second thing is that it's all about the real demands. I realized that more and more users, when they hold Bitcoin, and more government gonna recognize like Bitcoin as the mainstream kind of financial assets, then like people would hold Bitcoin instead of like stocks or real estate. More and more people would decide to do that. At least me myself, I'm doing this. So when I want to get liquidity, I need financial service on my Bitcoin. I need to get some yields, or I need to get liquidity. I need to do lending. So no matter I put it to Bitcoin ETF and borrow against it, or I put it to like lending, Solana lending, or Ethereum lending, I still need to like get liquidity, right? So that's all the real demands that we can foresee in the following 5 to 10 years, and that will make Bitcoin finance huge. So that's pretty simple, and yeah, that's my
Phenomenal. Thomas, any final thoughts?
Yeah, I think that, I share the conviction that Bitcoin will take off. I think that in my personal view, for any of these types of novel products to scale, it takes Lindy in general and time in the market for that to happen. And we've seen that with Bitcoin as a whole in general over all this time since it was created. It's had time on its side. And I think as more time passes and people get more comfortable with how do I go from the mental model of keeping everything in cold storage to now actually how do I utilize this in DeFi and what can I actually do with it? Is there point in taking it out of cold storage and moving it into DeFi and utilizing it as credit? I think as time progresses and people get more comfortable with this idea, they see this happening, I think it will only become more self-reinforcing, and that's when you'll truly start to see scale happen. I think, yeah, we all agree conceptually that, Bitcoin DeFi is here, but I think at, true scale, with time, I think, it's a certainty.
Yeah, it's fantastic. Well, gentlemen, absolute pleasure to be up here with you today. Thank you for an amazing discussion, and I look forward to continuing to work and build together the future. So, sure.
Thank you. And
Thank you.
shout out to Michael. Thanks.